Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable strategies, sectoral trends and most importantly your queries during the course of the show. So please keep commenting on our live feed and we'll have your queries addressed by a technical expert. Before bringing him on board, let's see what the global handover looks like. After a weak last couple of sessions, the European markets closed higher. Strong US economic data tamed investors' fears of a looming recession. Most sectors and major bourses entered the positive territory. Wall Street futures fall after the indices rallied, reversing a two-day losing streak as strong earnings and better than expected economic data in the US offset recession concerns. Asian markets edge higher, tracking the rebound in US, and the SGX Nifty also signals a positive start to the Indian market. Stuck in the spotlight today, there's Hindalco, Inox Leisure, AU Small Finance Bank and Redington. Meanwhile, oil prices slide on demand worries even as OPEC and its allies agree to raise their collective production by 100,000 barrels a day in September. Is the move expected to impact crude oil prices? We find out later on in the show. Okay, let's get going and discuss the technicals of the market and some stocks with Ruchit Jain of 5paisa.com. Hi Ruchit, thank you for joining in this morning. Talk to us about the trade setup. Looks like we're going to have a 7th straight day of gains.
Yeah, hi, very good morning, Karunya. Yes, I think this rally has been a very phenomenal if we compare to the recent corrections. But we have reached that overbought zone if you look at the momentum readings on the daily as well as the hourly chart. But usually when we see that the trend is very strong, market stretches in that overbought zone, and that's what we are witnessing since last couple of trading sessions. All the intraday dips are getting bought and the support bases are shifting higher. Now the support base for the market has now shifted to 17,200 mark. If we look at last couple of trading sessions, we have made a low around that 17,200, 17,225 range. So 17,200 is the immediate support for the stock, and until that support gets broken, I think one should not fight against the trend and rather look for stock-specific opportunities on the higher side. And what we are looking on the upside is 17,500 to 17,600 range, where next set of resistances are placed. So although we are in overbought zone, but it is stretching a bit, and I think it could stretch towards that 17,500, 17,600. Where one can then look to lighten up some long positions, and 17,200 should now be the trailing stop on all long positions.
Okay, all right. Want you to also analyze some of these individual stocks that are likely to be in the news. First up is Hindalco. Now, Novelis has given out its Q1 performance report card. Novelis has clocked a 28% growth in profit, coming in at $307 million. Sales have increased 32% year-on-year, coming in at $5.1 billion. And there has been a shipment of 962 kilotons in the quarter gone by, largely flattish on a YOY basis. But let's talk about Hindalco. A good rebound seen from, as compared to how volatile many of these metal stocks are. This one looks fairly better placed. But how does it look like going forward, and should one buy at the current levels?
So most of the metal stocks, if you see, they have no good inverse correlation with the dollar index. In the recent past as well, you've seen when the dollar index was in a bear trend, that was the time when metal stocks have done well and had given very good returns in a short period of time post that pandemic lows. But we have seen that dollar index now has been forming that high top, high bottom structure due to which the recent correction panned out since the month of October. And just because you have seen some pullback move in dollar index, the metal stocks have witnessed short covering. But there are no signs that the dollar index has topped out, or we would not see another leg of up move in the dollar index. So I don't think that metals are in a sweet spot for fresh buying at current levels. In fact, this pullback move should get good amount of resistance in next few trading sessions once the dollar index resumes its short to medium term uptrend. So I think not a good point to take a fresh entry. But yes, if existing long positions are there, then we could see some movement towards that 430, 440 zone where next resistance will come in. So around 440, 430, 440 range would be a good zone to lighten up the long positions if there are.
Okay, all right. Some more earnings candidates to watch out for in trade. One of them will be Inox Leisure. Very strong earnings delivered for the quarter gone by. Record revenue coming in at close to 600 crores, highest ever EBITDA at 130 crores. PAT has been the highest ever at 74 crores. The footfall has been about 1.8 crore. But let's talk about Inox's chart because if we look at the 3-month chart, from May to mid-June, it had been very, very range-bound. But when the market started recovering, in line with that, from sub 500 levels actually, 450, 460 levels, the stock has slowly inched up and now is trading firmly above 600. So tell us, is this momentum going to strengthen, or do you foresee some consolidation or some dips before any further upside happens?
I think certainly last 1.5 months where broader recovery has been seen, both the stocks PVR as well as Inox have witnessed a good buying interest. In fact, this rally has also been supported very good volumes. So the trend no doubt remains positive, and on the higher side we could see levels around 625, 630 in the short term. But if you look at the momentum readings that after this up move from 540, 550, there has been no intermediate corrections in between, due to which we have the momentum readings have reached in overbought zone. So risk-reward ratio is not favorable for forming fresh longs, but yes, the trend remains positive. So one should wait for any kind of declines in the near term, maybe not immediately, but after 2 or 3 weeks, if we get any decline in the market, and along with that, if the stock dips, then look for buying opportunities on corrections.
Okay. The next name on our radar is Redington, a stock we seldom bring up on the show. Again, an earnings candidate. Q1 revenue was up 25%, 16,800 CR. Profit has jumped almost 37%. There was higher operating performance, strong top line, which aided the overall performance and the bottom line figure as well. Redington, unlike many names in the mid-cap space, in the small-cap space, which saw a good rebound last 1 month, this one hasn't been able to stage that kind of a comeback. Talk to us about the technicals and the likely way forward.
So yes, the pullback move in last one month has not been good enough compared to other mid-cap, the broader markets that we have seen. Since we are in the later stage of this pullback move in the market as well. So I think there would be some pockets which would show a catch-up move, and Redington could be one of those stocks. So in the near term, one can expect an up move towards 140, 142 range. So just from a short-term trading perspective, one can look to form short positions. One can look to form long positions with a stop loss below 119 for probable targets around 140. But that just would be for short-term trading. At higher levels around 140, if it comes, then that ideally would be good levels to again book profits over there.
Okay. Moving away from earnings, there's been a corporate development for the next counter I want to flag off. AU Small Finance Bank, they have announced a QIP on 3rd of August, which was yesterday. The floor price has been set at almost 591 rupees per share. As against the current price of the stock, where it shut shop at 609 levels. So the QIP clearly happening at a bit of a discount to its current price. But how is this one placed on the technicals? Because there has been a good uptick seen last 1 month, but it has the pace of the up move has slowed down a tad a bit in the last few sessions.
So yes, I think you pointed out right that the pace of up move has slowed down, and that's primarily because when the stock was correcting along with the broader markets during the downtrend, the volumes on the corrections were very high. And usually when we see that during corrections when volumes are high, then those stocks and pullback moves tend to show some relative underperformance. Now, if you compare AU Bank with other stocks such as ICICI Bank or State Bank from the PSU basket, then I think this has seen some relative underperformance, and this up move is just a pullback move. So I don't think one should look for buying opportunities over here. Rather, I think if any corrections we get in from amongst the private sector banking stocks such as ICICI Bank, I think those should be more preferred, where the relative outperformance could continue going ahead as well.
Okay, all right. Ruchit, request you to stay on with us. We'll just touch base with you with some stock queries. I want to move on to my colleague Manisha Gupta right now for an update on the OPEC plus meet and its outcome, and of course the reaction that oil prices have had to that development. Morning Manisha, and thanks for joining in. OPEC plus has decided to raise the September output by 1 lakh barrels per day. It's the lowest ever increase. Is that something you were expecting as well?
Oh, well, yes. We've been talking about this, Karunya, that whatever OPEC does is not going to be enough, and it's not going to have any consequence on supply or prices for that matter. So when you look at the 1 lakh barrels per day, it is 0.1% of global demand. And as you said, it's the lower ever increase. What the increase that we saw from June to July and August was almost 50% of the previous month. And that is when you had seen that big correction come in for the crude prices also. But since then, it really has been wobbly, choppy, looking at various developments in the international markets. So what we are seeing in crude prices right now is the biggest weekly decline into this one in this year that we've seen. Brent is down by nearly 11%, and both the varieties are trading at around 5 to 6 month lows right now, and both well below $100 a barrel. What the markets also are taking cues from is the U.S. crude inventories, which also have jumped up by 4.5 million barrels. Markets were anticipating a very small increase if there was. So that is what is weighing on. And then clearly we've been reacting to the weak manufacturing data from China, Europe, U.S. The dollar index rebound also seems to be weighing on right now.
Okay. As far as I know, the U.S. crude inventories are slightly over 4.4 million barrels. But what is the overall picture like when it comes to inventory, not just in the U.S., but in the key consuming markets?
Well, we are looking at below average inventories if you compare it to last year, or even when you look at the 5-year averages. And that perhaps is the reason that crude is still trading above $9 there. But, even with that, OPEC in a statement has said then when you look at the global markets and the oil surplus that we started in this year with was at 1 million barrels, but that has now gone down to 800,000 barrels. So there is a bit of a trimming down in surplus as well. So that means that the demand destruction that we've been talking about isn't so great when you look at Europe and the Asian markets. The incremental growth clearly seems to be coming in from Asia, and India is your top contender there when you look at demand increases. So that continues to look quite positive.
Okay, all right. What about the gas prices? They've seen a bit of a rebound, from 2-week lows.
Oh, yes, this is as crazy as it goes. 7% of a decline on Tuesday, 7% of a jump up on Wednesday is what we are dealing with when it comes to gas prices. The only thing being slightly positive is that the Freeport LNG will now restart its activities in the month of October. Earlier, that date was not known. But, when you look at the markets, there are concerns in Europe, not so much in U.S., and it really is divided geographically when you look at the gas availability and pricing. So the markets will continue to trade within this range. I think we're really looking between $7 to $8.5 on the higher side. That is where the gas prices really seem to be playing within.
All right. Thanks much then for joining us with that update. Clearly, we're seeing a reaction coming by to OPEC's decision and the barrage of economic data that the markets are digesting. Oil prices have dipped a tad bit on back of that. Gas prices, however, have seen a sharp rebound. All right, back to the markets once again. Then Ruchit is standing by. So let's bring him on board once again to talk about a host of queries that we have called out. Ruchit, the first question I want to toss to you is from Vijaya. This is on Adani Wilmar as well as Adani Green. She wants to know if they will claw back to 52-week highs again in the near future. What do you see on the chart?
So Adani Group stocks, if you see, this has been one of the group where we have seen phenomenal gains in the past as well. And as of now also, whenever the market goes up, the stocks from this sector definitely witness good buying interest. So Adani Wilmar, for now, trend is positive. And recently on corrections, we have seen that the stock has formed a good support around that 640, 630 range. So yes, one can continue to hold on to the long positions. It's difficult to take a call whether previous highs would be surpassed in the very near term. But at least until we see any negative signs, one can expect levels of around 720, 725 immediately. And once if we surpass those levels also, then one can continue to ride the trend with a trailing stop loss. Adani Green, there may be some volatility in the near term because it's already reached that overbought zone, and post that overbought zone, the stock has started showing some down moves as well. So I think volatility could be there. One can look to book out on the long positions if there are on Adani Green.
Okay. Moving on to the next question from Vinay. He wants your view on MTAR Tech and wants to understand if it has more legs to climb up further from these levels.
So relatively, where we have seen good pullback move in last 1.5 months in many of the stocks. MTAR has been one of the stocks which has not seen any significant up move. It just last 2 or 3 trading sessions, the pullback move has started. So I think on retracements 1500, 1520, which were the previous swing highs, that will again become the resistance. So not a signs of any start of a fresh uptrend, but it just should be taken as a pullback move for now. And if it's from a short-term trading perspective, then 15, ideally around 1520 should be good levels to exit from the stock again.
All right, okay. Moving on then to the next question, and this is from Naveen. He wants your view on Reliance Industries. What's the call there?
So we have seen, after some news of windfall tax, the stock has shown movement on both the sides, but of late the stock has been showing a pullback move, which is retracing the previous correction. And 61.8% retracement is placed somewhere around 2640 to 2660 range. So we expect some more pullback move, maybe next couple of trading sessions itself, which should participate along with this market momentum, and 2640, 2660 should be expected. So short-term momentum remains on the positive side for some more upside from a near-term perspective.
Okay, all right. The next question is from Trilok. He wants your view on REC for both long as well as the short term. REC, last couple of sessions, it has inched up a tad, but it has been a slow mover, and that's typically what the trend is like with many of these PSUs and especially with the REC. So tell us what lies ahead.
So I think, yes, this is one of the slow movers, but if you look at last 1 month, the participation has been interestingly good in this stock. The stock has again started forming that high top, high bottom structure due to which the mid to long term chart structure has become positive. So if it's from a mid to long term perspective, then continue to hold on to the long positions, but it's just short term. I think that the stock has already reached the overbought zone. So either we would see some price wise correction or a time wise correction where the prices can see some consolidation in the near term. So not expecting any much bigger up move from here on in the near term, but mid to long term charts are positive to hold on.
All right, that's the verdict then on REC. Next question is on Titan. This is from a viewer whose handle is Orange S. We don't know their name. So I'm just going to read out the question. Titan, is it a good buy at the current levels? I think it's perched above 24. Yes, it is at 24.14 right now. Yesterday it shut shop with a gain of 1.5% almost. It's almost clawing back to those, March, April highs that Titan did witness after a phase of consolidation. So do you think this is a good time to buy or wait for a better opportunity to enter?
So in recent correction, we had seen sub 1900 levels in the stock, and from that sub 1900 mark, it's already moved to 2400. So risk reward ratio is not that favorable to create fresh longs over here. But short-term trend remains positive. If you are already long on the stock, then you can ride the trend for target somewhere around 2480 to 2500. But if you are looking to buy fresh, then wait for some declines, maybe in near term. If the stock again corrects towards that 2200 or sub 2200 levels, then I think you can look for some buying opportunities over there. But no, it's already overbought. If you have missed the bus, then rather stay away from it and don't try to catch the running bus.
Okay, all right then. Next query is on Varun Beverages. Jitendra wants your view. He says that given a good run-up, is it a good time to book profit? What is the forecast on the technicals?
Yeah, so this has been one of the counter, which has shown a good outperformance when the broader markets were correcting. If you look at the months of April, May, when we had seen a very sharp selling in many of the mid-cap names, Varun Beverages had shown time-wise correction where it consolidated, and the entire consolidation was around its all-time highs and above its important support levels. So the trend for the stock remains positive, and usually when we see then such stocks which show outperformance during corrective phases, when the market resumes their uptrend, those stocks tend to give good returns. So continue to hold on to your long positions. I think trailing stop loss should be a good method to ride this trend. Now the support is coming around 880 marks. So keep a stop loss below 880 and continue to hold on as the prices move higher from current levels. Keep trailing your stop losses on the higher side.
Okay. Next stop we want to address is Ashok Leyland. Praveen has written to us and wants to know your view here. Last 4-5 months, slowly and steadily, it has inched up quite a bit from those sub 100 rupee levels. Now I think it's purged close to 150. Yes, that's where it's at. So tell us, what's the forecast?
So the auto stocks have generally done very well in last 3 or 4 months, and Ashok Leyland has been definitely one of those stocks which have seen up move with very good volumes. But the momentum readings have now about overbought zone, and 142 would be very important levels. In fact, I'm expecting some profit booking in next 1 or 2 months in the broader auto space as well because of the overbought setups. So there could be some profit booking. So 142, I think, would be important level to watch out for in this stock. If that support breaks, then we could see some retracement of this entire up move which we have seen. So if you're already holding the position, then keep a strict stop losses below 142 mark.
Okay, all right. Next up, we want to address ITC. Will it go further up? Is the question coming in from a viewer whose handle is Red Brands. It has, just single-handedly gained last 4-5 months, and it continues to be quite resilient. But after crossing these, important psychological level of 300 rupees, do you see more upside? And what will be the next big, level to watch for this one?
So certainly, after a long underperformance, if you look at mid to long-term charts, when the stock was trading around that 200, 180, 220 range, it was one of the stock, which everyone was looking to sell out. And now everyone is looking to buy out this name because of the outperformance during the corrective phase which the stock has shown. So the trend still remains positive. One should not rule out some time-wise correction in the near term, where because the prices have given a good run-up, the stock may turn sideways. But in case of any market volatility, I think this would be one of the best defensive names which traders or investors would look up to, and hence the downsides would be very limited in the stock. So although the stock has crossed 300 mark, it can again give some declines towards the 290 to 295 range. But some time-wise correction would not be bad for the stock for the next leg of up move. So keep some mid to long-term perspective view and continue to ride this trend. There are no negative signs in the stock. Just a time-wise correction would be good enough. And in case if you get any declines, use those declines as good buying opportunities and to add more positions.
Okay. Sumit is writing to us, wants your advice on Nazara Technologies, and unlike many, mid-cap peers, this one hasn't participated last 1 month in the market up move. So tell us what are the charts telling you?
So last few sessions, we have seen up move in the stock, but then this up move is supported by good volumes. If you see last 3 or 4 sessions, the volumes have particularly been good. So I think this could retrace the previous down move, and the retracement, the 38.2% retracement of the previous downtrend, recent downtrend is coming around 800 levels. So this pullback move which we had seen closed around 710 yesterday could stretch more towards that 800 mark. So continue to hold on to the longs from a near-term perspective, but around 800, you should again take a review on the stock, whether it would be good levels to book out gains over there.
All right, okay. The last query I want to bring up is from Sai Reddy. He wants your view on Tech Mahindra. He's already incurred a 16% loss, so wants your view for the short as well as for the long haul. Tech Mahindra, again, I think it was quite range bound if you look at the last 1.5 months. Right now, I think it's trading at 1,052. Yes, there has been a slow recovery from those 950 levels, but still it continues to be, hovering around that range. So tell us what lies ahead.
So I think already price-wise correction has been done, but if you look at the broader IT space, then IT has been doing what Nasdaq has been doing. Irrespective of when we saw the results were out of most of the IT names, there was just reaction of 1 or 2 trading sessions, and then again it has been following what has been happening globally and especially in the Nasdaq. When the Nasdaq is correcting, our IT stocks are also showing some correction irrespective of the news flows or the rupee depreciation or anything. And now when we have seen some pullback move over there in the US markets, then our IT space has been also showing pullbacks. So mid to long term trend would more depend on how the IT space globally shapes out. But for now, I think because of the price-wise correction, which has already been seen, the downside could be limited from here on, unless we again see a resumption of the downtrend in the global markets very severely, especially in Nasdaq. So continue to hold on to your long positions, keep some stop losses. 1020 is a support, short-term support for the stock, and keep some stop loss below 1020 for the trading positions. And from a long-term perspective, if you see the relative performance, then I think Infosys could be much better than Tech Mahindra in terms of the outperformance. So you can look to switch out if you want to remain in the same sector. You can look to switch to Infosys rather than Tech Mahindra from a long-term portfolio perspective.
Okay, all right. I believe even you have a tech heavyweight on your stock ideas for the day. So tell us what is that and the other stock you have for us.
Yeah, so as I said, the IT space has been bouncing because of the bounce back which we are looking in the Nasdaq. And I think the Bank Nifty already has seen some good retracement, but that IT's retracement is yet to complete. Even in yesterday's trading session, we saw that all the sectors were negative. banking ended flat, but IT was the one which holded the benchmark index as well. So I think this up move could continue, and amongst the heavyweight TCS is on my buy list, which has seen a price up move with good volumes. The derivatives market has also seen long formations over there. So from a trading perspective, one can buy TCS from the IT space with stock below 3290 for targets around 3400, 3420. And other name would be one mid-cap name which has given a breakout, which is LG Equipments. The stock has given a breakout from a cup and handle pattern yesterday. Price have closed above its swing highs and that too with good volumes. So LG Equipment from the mid-cap basket should do well in next few trading sessions. One can buy with stock below 418 for short-term targets around 470.
Okay, Ruchit, thank you so much once again for joining in and answering so many stock queries and concerns that our viewers had. A pleasure having you on board as always. With that, we're going to wrap it up right here on Morning Trade. Thank you for tuning in, but stay with Money Control. Markets with Santo and CJ comes up next.